this morning we'll be going through our charts. Of course, we'll be going through indices, see what we have on indices this morning. And by indices, I mean the US 30, the NAS 100, and S&P 500. And so probably if there's still time, I'll go through one other currency pair I'm looking at currently, right? So this morning, let's go into our US 30 to see what we have. Our bias has not still changed in the long run, still the same. Doesn't change, nothing has changed that much yet, right? The daily time frame. So nothing has changed yet from what we've been seeing. Market has just been printing multiple break of structure to the upside, higher highs and higher lows from the daily time frame, even from the weekly time frame. We've been seeing that happening since October last year, 2023. We've been seeing market pushing to the upside aggressively. Interesting how I'm just seeing something on this chart, the same concept of liquidity and market structure that I'll have been able to use to maximize this entire move, right? It's in the past, but of course you can learn from it. So what do we see here? The market did. We saw a sweep of this level, right? So this gives us the confidence that, okay, this level is probably going to hold. That's the first, the first pillar of the entire framework of the model, right? We want to see a clear sweep. If you don't see a sweep, you're not taking the trade. So we saw a sweep here, and then what did market do? We saw, before breaking this level to the upside, we saw market creates a kind of a lower high, right? And after creating this lower high, we now clear this whole structure point to form a new higher high, right? Clear these previous highs, this one, this one, this one. And what did we see market do? So exactly, market came to the downside, just how I just saw this some minute ago, right? And then what did we see? Started pushing to the upside. I didn't see this actually. If I've seen it, I will have maximized this entire move. I will have maximized this entire move and not even try to sell for once in this market, right? Came back, clear this liquidity down here. Market came, swept through this place, this liquidity, right? And then what did we see? Market started pushing to the upside. That's one. But of course, you want to know that this is not a 40 pip SL movement. This is kind of probably, I'm assuming, but should be up to 300 pips movement in terms of SL. Interesting. 200. This is over 1,000. Yes, it's over 1,000. So probably there's no way I would have entered this trade also if I wanted to. As much as I would love to see it, I would just see it, analyze, and then move on. But practically going into the trade, except I want to risk down to the minimum, to the barest minimum, which probably is possible, but then we saw market did all of this thing, and I would have probably exited at this point here, to be fair and to be sincere, right? This was the former high that we had, our previous all-time high, and we saw markets broke through that effortlessly. So we can see from the daily time frame that this is just hindsight data. You can see from the daily time frame, our weekly time frame, that the market has been bullish. The market has been creating multiple higher highs and higher lows. Every low that is created, every lower low created is for price to come to a discount level and then begin to buy to the upside. So, and it's nothing new. It's not, I'm not surprised with this price movement technically because of the fundamental backing it up. Recently, we've been seeing that NVIDIA stock has been, not even NVIDIA alone, all stock associated to AI. Investors have been very optimistic. In fact, they've been very optimistic in every stock or every project that is attached to AI development. So we saw that, we are seeing that Every project that is AI attached, any small thing AI will load money, and then if their stock is rallying, if their stock rally, definitely these guys are going to rally because it's like an index for all of those kind of company, right? So we saw that happening on US 30, NAS 100, and even S&P 500. We've seen stock like Nvidia, excuse me, Nvidia being the lead of such kind of movements, been pumping. Their stock price has been, off the roof from last year even to this year, right? So what are we seeing on daily time frame? Also the same thing. Also the same thing. It's been pushing to the upside. It's been pushing to the upside with force. With force. Like I said, every opportunity to sell is for buyers to enter and then take price to the upside. So I'm seeing something interesting for a buy now on the daily time frame. On the daily time frame, which I want to explain, is still the same concept, right? It's still the same concept when it comes to market structure and liquidity, right? So what am I seeing in this place? We are seeing gradually, or let me even break it down to the 4 hours. We can all agree that on the daily time frame, we are seeing nothing but a buy, nothing but a buy, because price is clearly bullish to the upside. However, I was going through some fundamental, that was early hours of this morning, and then I saw that the investors are beginning to price in, factor in, what's it called, rate cuts, right? They're beginning to factor in rate cuts, what they might do if we see a major rate cut. That will be for, I think, next week or towards the ending of this week, when other fundamental news will be released. But for now, what we are seeing, and we are trading what we are seeing in the market, we want to see take only buy position in the market instead of looking to counter trade. If it was currency now, we can say we want to counter trade, but counter trading indices, US 30, can be tricky and can be very risky, right? And okay, can do a lot to your account when it comes in terms of damages. So you just want to ensure you flow with the trend. When the big boys are going, you follow them. Don't try. This is not a place you want to show that you are special, because they are going to swallow your account in a matter of minutes. So what am I seeing here? I'm seeing price swept through this last structure point. So the last sweep that I saw. Let me bring it on 4 hours so probably can be clear for us. So this was the last structure point. I saw a sweep. Interesting. I have two POI here, two AOI, sorry, area of interest, right? I have two area of interest here. The first one is closer to where price is. And if that does not hold, then we can begin to say we want to come down to this lower time frame, the second point of interest. So let me start with the first point of interest. So from there, we will look at what we want to see. I'm expecting price to, at least come down to, oh yes, interesting. That's started feeling all of this imbalance it created due to that momentum we saw in price movement last week. So begin to feel all of this imbalance. I'm also expecting it to come down and feel all of this imbalance that I'm seeing here. However, I'm looking at one point of interest here with a sweep we saw here. Price swept through two levels in this place. We saw the first sweep here. The first sweep, saw price swept through this place, right? Price swept through it and swept also through this guy before moving to the upside. And then before we saw that movement to the upside, what am I looking at? I saw price also came back to this place to give me a lower low, and here becomes my protected low. It's a simple concept, market structure and liquidity. From market structure perspective, we saw that we are creating multiple higher highs and higher lows to the upside, right? And so we are coming back to, add a liquidity points to it. So price swept through this liquidity point, this first one swept through it, and then before it continued to the upside, created a kind of lower high or lower high, and then lower high here, and then price pushed to the upside. So what are we expecting price to do? Expecting price to also come when you flip this entire move, entire swing. Here it should be lining up around 88.6 level, fib level, right? So that's under confluence. And also this other block that is here, but this other block most likely will be violated. Most likely, but if this point we hold, this other block will be violated. And I've seen this thing happen a lot of time. We just see a little reaction of this other block, and then price will clear this structure point, and then this structural liquidity here, and then we see it begin to move to the upside. And one of the reasons I'm considering this setup is because of the fundamental backing up US30 and NAS 100 currently, right? So trying to sell at this point might not be a good idea. However, you can still look for position to sell, but you can't be too sure of what price will do, because reports are coming out, and if you are not careful or you're not on your chart to see those reports and then take position of those reports, you might end up ruining your sell position, right? That's happened here. That's happened multiple times here. Everybody was selling and we thought it was going to keep until we saw that push and everything changed to the upside. So you want to be careful if you're in the sell for now, right? Once you just know what you're doing, you don't have any problem, right? Once your risk is defined on the sell position, you don't have any problem. So what am I looking at? I'm setting price to come to this discount level. If price comes to this discount level, and then from there we can take a buy to the upside. You can start considering a buy to the upside. I'm looking at that for now, with about 75 pips thereabout. 25 pips SL, which is reasonably considerable when it comes to US30. Because US30 does about even say 100 to 200 pips in 1 hour candle. Just a single 1 hour candle can run up 100 to 200 pips, right? So having 80 pips, 70 pips, at least the highest probably 100 for SL is still reasonable when it comes to US30, NAS 100, and S&P 500. Because you want to give it space to breathe, right? It's not like the regular currency pair, EU and GU and the rest like that. You want to actually give it enough space to breathe so that your what's it called? Your trade can actually pay out fully. So I'm looking at this, I'm considering this as the first area of interest. However, if this gets invalidated, this is the ultimate place I'm looking for to buy again, right? Because I want to ensure that I see a clear sweep before anything happens. This is the place I'm looking for to buy again. This level, looking forward to buy from this level. So a sweep in this level, and then price give us that point as our strong low that we don't expect to be violated, right? We don't expect it to be violated, and then we saw a structural liquidity point here. This has been the setup from February, which we thought was going to hold, but it didn't hold, right? Price just came close and then continued to the upside. So I'm looking at this for a buy to the upside. However, when we come down to the 1 hour time frame, I think there should be there should be a level, yes. I think we will still scale down. We still see another good place to enter again from, but with this, it is still safe to buy from this level. Okay. I'm looking at this level to buy. That's if price come all the way down to this level. Now you want to know that we don't control price, right? We don't control price. So that's why we're very being careful when it comes to trades like this. We just want price to do its thing. If this level eventually fails to hold, probably due to fundamental release or any other factor, normal price action just playing out, we know that, okay, this is our second point of interest to continue the buy to the up direction, to the upside. So this is what I'm looking for on US 30, pretty much the same thing on NAS 100, though not exactly the same position. Yes, almost the same thing on NAS 100 too. Almost the same thing on NAS 100. So for now, I'm seeing something that looks like a sell on NAS. However, I don't want to tempt NAS 100 price action because I know it's too well to violate counter trend position. So I'm seeing something interesting on NAS for a sell. I don't know if it's going to hold. I might not enter, or to be sincere, I might just enter with a little risk on it, right? It's a little risk on this position, right? I'm seeing like a sweep here. Price swept through this place, right? Price swept through it and then give us this entire level to be. Let me change it to H2 so I can get specific of H4. Okay, not clear, not clear, not clear. Not that clear, not that clear, not that clear. I might not enter, it's not that clear. And so we saw this happen. We want to note now, and the reason behind even not taking this series because of the overall direction from weekly to daily to H4, everything is pointing at buy, buy, buy. So selling here is like somebody that is having strong head. Like, why are you selling, right? But then this is counter trade. It can begin to just tap into this place to fall back to this area of discount, right? To begin the buy to the upside. So you want to play safe, one direction. Also, you want to be not too careful so that you don't miss out position. So I'm looking at this also, that price might eventually probably sell off from this guy, sell off to come in. Okay. Excuse me. So I'm looking at price going to take out this guy, this structural liquidity here, and then sell off, take out this structural liquidity, and then continue to the upside. Right? I'm looking at this happening. If it does happen, fine and good. That would be interesting. However, I want to be very careful not to, take a position that is counter trend on these guys, US 30, NAS 100, and S&P 500. And US 30 and S&P 500 price action are almost the same thing. So that's why we're not checking it this morning. So I'm looking at this for this guy. I'm seeing it happening on 1 hour time frame. So probably it might make sense to just give it a try, just to see how price, or just watch, stay out and see how price react to everything, right? I want to see this happen. Price taking out this structural liquidity here. This is structural liquidity. And then this is our protected eye. We don't expect it to be taken out, at least for now, right? We want to see this guy tap into this place and then begin to fall down to up to this level, and also from this level begins to buy up to the upside. So that'll be all for US 30 and NAS 100, guys. That'll be all for this morning. Please, if you have any question, you can start to ask in the chat box. You can begin to ask your questions in the chat box. If you have any question, any gray area you want us to shed more light on, you can begin to ask your question in the chat box. You can begin to do that. And while you are typing your questions, I want you to know that we have a private group for those interested in taking specific area of those interested in taking our setup, like specific point of entry, exit, and also take profit in the market. the link will be sent in the chat box now, where you can join, and then you see the instruction. It's just a 3-step instruction. You follow through, and then you'll be added to that group, right? The first is for you to open with a link that will be dropped in the chat box. Sorry about that. 2 minutes, 3 minutes, you will see the link in the chat box, right? So that's the first instruction. You just join and sign up using that link. Number 2, you fund your account with a minimum of say 500, 300, 2,000, up to $20,000, right? And once you've done that, send a screenshot of that funding to our Telegram, and in less than 3 to 5 minutes, somebody is going to respond to you. So I'm seeing some people saying gold, please, US oil analysis too, please, gold. So the thing about this is every day, each trader, when any trader from the floor come to analyze, they have specific area where they specialize, right? When it comes to each trader on the floor, we have specific area where we trade, and that is where we focus on when we come on the market color, right? So gold will be coming tomorrow by Lekon. You will be coming on board to analyze gold tomorrow. US oil, you might be lucky if my other colleague coming up have that chance to analyze US oil. I hope she does, right? Though she's a commodity trader, she might most likely, if you're lucky enough, to analyze US oil for you, right? But then you want to be patient. Every trader you see coming live on the market color have specific area they trade, right? And so we don't want to mix things up together. So that'll be all. If you have any other questions specific to US 30, specific to the indices, S&P 500, NASDAQ 100, you can begin to ask. So like I said, the private group is available. If you want to join, kindly follow the instruction in the chat box. Kindly follow the instruction in the chat box. It's simple. It's easy. Click on the link, then fund your account with a list of 500, and then send a proof of payment to our Telegram handle, which the link is also in the chat box. And definitely somebody is going to attend to you, which after then you'll be added to the group. All right, right about now, we're going on a short break. Thank you, and God bless.
All right, everybody, good morning, and welcome back to the second part of today's analysis. Thank you for sticking around. My name is Abby. If you're just joining us, my name is Abigail, and I mostly analyze the commodity currency pairs. Please let me know if you can hear me in the chat box so I know we are together and on the same wavelength. Are we together? Sorry, this network is acting funny. I'm trying to, asking me to wait. While I wait, let me know in the chat box if you can hear me. Teacher. There's a problem here. Okay, we're back. All right. So I'm going to be quickly looking at AUD USD, NZD USD, and USD CAD, which are basically the commodity currency pairs. So starting off from the AUD USD. As usual, we'll be starting off from the weekly time frame. Why do we start off here? Because we want to see the overall trend, right? So when you come on AUD USD 1 week, you see that structure is clearly to the downside. Same thing on the daily time frame, same thing on the 4-hour time frame, structure is to the downside. And this move is currently a pullback, right? So we see direction of structure. Where's the most likely area that this guy is going to? If structures keep being formed to the downside, AUD USD will be coming here next. So these are our next area of interest on this particular asset class. AUD USD is going to trade into this level. If it breaks below, it's just going to continue the downtrend. It's just going to. Oh, okay. So for you who is trying to log in and you're having issues using the link, simply copy the link and paste it in an Opera Mini browser, or use an Opera Mini browser to access the link, and you'll be able to proceed and access the site. And ensure you turn on your VPS as well when you. So ensure you turn on your VPN on Opera Mini when you use the chat, when you use that particular browser to access it. Okay, so let's get back to business. Structure is to the downside, straight to the 1-hour time frame to look for entries. But seeing pullbacks. Currently happening. So where do we expect this guy to trade all the way into before it continues the sell move? What do? We swing our most recent swing on 1-hour time frame. So we have a fair value gap here, which looks like one POI. Then we have another fair value gap all the way up here. Right? So if AUD USD trades all the way into this fair value gap, consumes the entire FVG, and trades to the 50% fib level, will be more comfortable to trade. Now, when it comes to fair value gaps, it's either two things happen. One, it trades 50% of the FVG you have and continues to sell, or it takes up the entire thing. In this situation where if it takes up just half, it will be the 38.2% of the fib level, would rather say it goes to the 50% fib level before we sell, because we always want to sell high, right? We don't want to be entering the trade that's already been exhausted. Now, that doesn't mean that in strong moving trends, the fib levels like that 8.2 wouldn't hold. Most times they do, but it's preferable that we buy at premium levels, so we're not just catching crumbs. So this is our first POI. Trade all the way and tap into the 50% fib level and then drop. We'll be willing to sell. If it doesn't respect this level, trade into the other fair value gap, which we have here, which is between 61.8 and 78% fib level, and then we sell. Now, because we'll not be on the charts when price gets to this level, we're going to do a recap by New York session to see what happens if we place that before then. But peradventure, we are not, or it happens before New York session happens. What do we want to see on the 1-hour time frame before we sell AU? So I'm going to give you a typical example. We want to see a bearish engulfing candle. Take note, when price gets to our point of interest, we want to see a bearish engulfing candle and a continuation pattern. A sweet example of that is what we have here. I hope you're seeing my chart. So we have, this didn't engulf actually, this just formed more like a base, right? This didn't engulf. We could also use this. This is a base that we have here and the continuation pattern. We fib just the wick of the base candle right here. And then we go on the 5-minute time frame to look for a variation pattern for us to think of selling AUD USD. I'm sure you're wondering what a variation pattern is. It's basically having 3 candles. So this is a typical example of a variation pattern right here. I'm going to mark it up so you see it clearly. This right here that we marked is what a variation pattern is and what we want to see. So we're bearish on AUD USD. We've marked up our point of interest. We've shown you rather what we expect to see when price gets to those levels. 1, a base or engulfing candle, continuation pattern. Then you come on the 5-minute time frame to look for a variation pattern to continue selling AUD USD. Is that clear? Next, we're going to look at NZD USD, pretty similar to its brother AU. As usual, weekly time frame to check the trend. This is even clearer than AUD-USD. Structure is to the downside. Daily time frame, you see the structure is even clearer. Consecutive lower highs and lower lows being formed. Where is NZD-USD going to trade into? Here. If it takes out this level, it has even taken out this level actually with a bodily candle. So this is a retest that will form the next leg that will form a lower low, right? So this is the next POI for NZD-USD on the daily time frame. Structure is still to the downside. We have fair value gaps that we can mark up here on the 4-hour time frame. There's one fair value gap right here. And there's another fair value gap. So price already tapped into this. So this is the fair value gap which price tapped into and then continued to sell. So then the next fair value gap we're looking at on the 4-hour time frame is the one that we have right here. So we already gotten our structure, we've got the flow of the market. What do we do next? Entry. Go to the 1-hour time frame, right? As usual, you fib your most recent swing. Sorry, I'm just going to delete that diagram. You fib your most recent swing. Right? Okay, so we're looking at price. This is the 4-hour fair value gap which we marked. The 4-hour fair value gap which we marked, but we would prefer still for price to trade into a premium level, being 50 or 61.8% fib level before it continues the sell of NZD-USD. And the exact same thing we did on AU, we want to see on NU. One, look for a base or an engulfing candle, a continuation pattern. Go on your 5-minute time frame and you look for a variation pattern to continue the sell of NZD-USD. I hope this is clear. Yesterday, I had a client, not a client, somebody who joins our market color sessions daily. And he said yesterday was the first time he joined. He was just saying that everything seemed so strange to him. All the terms he was hearing was funny. And I laughed because I was exactly that person some months ago. I mean, I didn't even know what a candlestick was when I started trading, right? So with time, you're going to figure out what all of this means. Just continue joining our market color sessions so you see how we trade, and over time it will begin to make sense and you begin to flow with us, right? So we're done with AUD, we're done with NZD. Our bias is to the downside. We've shown you our point of interest on these guys, and we've shown you how to enter as well. Are we together so far? Is that clear? Let me know in the chat box. Is this clear so far? Is that clear? Let me know quickly so I know we're all together and we can continue. The next asset class we'll be looking at is USD CAD. All right, thank you. USD CAD, right? Now, when you come on the weekly time frame of USD CAD, you see there's a lot of equal highs and equal lows that have been formed right here. But if you decide to look at the most recent swing, which is right here, just going to separate it. These are our most recent swing. We seem to be bearish on USD CAD, right? We're currently bearish. But when you go on the daily time frame, because of the structures you've seen being formed here, you're going to see more bullish moves here. So we see consecutive higher highs and lows being formed. But what do you notice right here? There's a resistance point on USD CAD, right? Price has tapped in, rejected a bunch of times. There's a resistance around here, a lot. It came, they tried to buy, they didn't break above. The same thing came, tried to buy, and they didn't break above. So this now made me go down to the 1-hour time frame to see, as of last week Thursday, if you joined our market color, you remember that we had pointed out a sell on USD CAD, which is already playing out. We marked up this level in our sweep, pretty similar to what my colleague did on US 30 and NAS 100. We marked out this level as well. Right? So you see that price already traded into the other block that was left right here, and it's starting to react, which is in confluence with the weekly trend that we see on USD CAD. It is starting to sell. Now, although the daily time frame is showing more structures to the upside, you should bear in mind that price is fractal. 4-hour time frame is also showing the structure to the upside. Whatever happens on the lower time frames, the higher time frame will eventually catch up with. So there are two things I'm looking at on USD CAD. I'm looking to sell, I'm already selling USD card, right? From where it currently is, the 1 hour markup which already selling, but I'm only going for 40 pips. You might be wondering why I'm going for 40 pips. If this is just a rejection based off here, and we decide to mark up this is the swing. When you go on the lower time frames, you see that that's a clear swing. Just going to delete this quickly. If you take this swing here from here to here, you see that price could just trade into the 50% fib level before it now starts to buy to take out all of the liquidity residing here. There's a bunch, as earlier mentioned, there's a lot. There's so many stop losses are just waiting to be tapped, right? So I am willing to sell USD card into the 50% fib level, bearing in mind that the probability of USD card going to take out all of those liquidity is also there. And that's why I'm only going for 40 pips. And 40 pips is achieved, I'm going to stay out and watch what happens at that 50% fib level. If it continues the buy move to the upside, then I'll reanalyze and follow the trend. If it doesn't, I'm good regardless. I'm good regardless. Okay, I'm going to go through it one more time, Samuel. So when I look at USD card, I also like to touch on US oil. I also like to touch on US oil. Now, why do I look at US oil when I'm analyzing USD card? Because the Canadian currency is heavily dependent on the export and import of US oil, right? So whatever trend the US oil is doing or making, it gives me an insight of what the USD card is going to do. Like here, you see structures being formed to the upside. The next POI on this guy looks like it is right here. So if structure continues being formed on US oil to the upside, you see it makes sense to continue selling USD card. That means the US oil is bullish, the Canadian currency is strong, and the US dollar is weak against the Canadian currency, which makes sense for us to sell the USD card. And if you also looked at DXY today, you see that there's still a lot of movement to the downside before DXY continues its up movement, even on the 1 hour time frame. Even on the 1 hour time frame, if you flip this entire swing from point A to B, we expect DXY to still sell all the way into the 61.8% fib level. We also have a fair value gap right here, which serves as a confluence. For before the XY takes on a bullish move. So for now, we're still very much bearish on the XY. So the USD card sell is also supported, and the AUD NZD USD sell that we're looking at eventually playing out will eventually take form when everything aligns. I hope this is clear. Okay, I am seeing a box pattern being formed on that USD card daily though. Like after it gives the liquidity outside, it may reverse down. Okay, so let's quickly look at USD card. Okay, so my boss is seeing a box strategy being formed here, right? He's seeing, well, once this liquidity is grabbed all the way up here, it may just reverse to continue the sell move, right? And if this is actually obeyed, if this happens, then it makes sense with what we're seeing on US oil and DXY. If DXY keeps being bearish, USD card is going to keep being bearish. If US oil keeps forming structures to the upside, USD card is going to keep selling. I hope this is not sounding like magic in your ears. So yes, we're looking at liquidity being grabbed and then come back in here. So I'm guessing this is a shoulder, a sweep up, a sweep down. This is going to trade all the way here to take out our point B and then drop. That is simply the box strategy. Right, BMS, the BOS in December. Then a mitigation from January till now. Yes, sir. Right. So this is it right here. A sweep down, a sweep up, move back down, tap into the shoulder that has been formed right here. Sorry, the first box strategy I played out wasn't really clear. So these are shoulder, a quick move down, a quick move up, forceful move down, a break into this, into the shoulder, and then USD card is going to drop. That's what you're seeing, right, sir? All right, sir. So yes, this is what we're also seeing a box strategy that's going to be formed on the daily time frame. Shoulder, quick move down, quick move up, sweep down, trade back into the shoulder, and then yes, it will take a while before this plays out because it's the daily time frame. So before all of this movement happens all the way into that shoulder, it's going to take a long period of time. Okay, I'm just going to quickly touch on the entry pattern that Samuel had asked for on AUD/USD before my boss comes on to give us more insights. So I had said that when price gets to our point of interest, which is a 50% fib level, or the 61 to 78.6% fib level, we're going to be looking for a base and a continuation pattern. A typical example is what we have here. So you might want to take a screenshot of this so you remember. When you see these equal candles, we even say it's a twin tower. When you see these equal candles being formed here, and you see a continuation, a break below of a red candle being formed to the downside, you go to the 5-minute time frame and you look for a variation pattern. What is a variation pattern? It's where you have 3 candles. I'm trying to see a perfect example of what a variation should look like, so you know when to enter the market. So we have, this is a typical example of a variation. You could use this. When you see something like this formed on the 5-minute time frame, after the continuation has been formed, then you take the sell of AUD/USD. All right, my boss is going to come on. Good morning, sir.
Good morning, good morning, good morning, good morning. Let's quickly see CHF-JPY. Those of you that were around yesterday, we were talking about central bank or monetary policy divergence. Monetary policy divergence. Who can remember what we spoke about? CHF-JPY. Let's see it on the 4-hour or thereabout. Exactly. And we mentioned something about monetary policy divergence. And that the Swiss National Bank is cutting rates at the same time that the Bank of Japan is hiking rates. Now, there's still an interest rate differential, but that is how monetary policy divergence, that is how it plays out, right? How many of you remember that conversation from yesterday? So we can see that based on that conversation, we can see what's happening. We can see what's happening in the markets. How that because the Swiss National Bank is cutting rates from 1.75 to 1.50, that's 0.25, 25 basis points cut. And the Bank of Japan is increasing rates by 10 basis points, 0.10. We see that the Swiss franc has started selling versus the Japanese yen. And I said, I'm going to keep looking at the Swiss franc, especially on the higher time frame. Why? Because I want to see that as the catalyst, the indicator that sentiment on the yen is gradually becoming bullish. All right, so see it forming a lower low today, and it's gradually trying to break all those lows. If it can break the lows of 167, right, then we may see demand for the yen as Switzerland starts losing value against the yen, safe haven to safe haven, other currencies may start following suit gradually. So this is one of the ways when you can tell a long-term reversal using fundamentals, using interest rate differential. because people will always search for yield. I hope this is very, very helpful. For those of you who don't know how trends can start, all right, how trends can start. The same way the last bullish trend on USD started in November 2022, if I'm not mistaken, due to interest rate hike by the Fed. All right, so this is how trends start. I hope this is helpful for someone. Okay. All right, so that's basically it. What else are we looking at in the markets today? I'm looking to see some form of intraday bullishness on gold. Let's see gold. Some form of intraday bullishness on gold. Why am I looking for intraday bullishness on gold? Okay, so yes. So why am I possibly looking at intraday bullishness on gold? Who can tell me why? Can you see the shoulder? Can you see the shoulder to the upside down shoulder? Can you see the sweep? Upside down shoulder, sweep. Can you see the upside down shoulder? It swept sell side liquidity. It swept sell stops.
Okay.
Exactly. Exactly. So that's a sweep. Then what happened after the sweep of 2151? We saw a sharp move to the upside, forming a fair value gap. Right? So what's the box pattern? Shoulder, sweep with fair value gap break of structure. Then what now happened? Price moved all the way back down. Now, do you see that clear flip zone? There's a clear flip zone. The wick that was taken out and the wick that was formed after the FOMC. You see those long wicks, it became a flip zone where previous resistance became support around the 21st, 20th into 21st. Exactly, that's a flip zone. Let's draw the fair value gap there. Inverted fair value gap.
So all the way here.
Yes, all the way there, exactly. From that, exactly. All right. So now inside that, so price has tapped into the inefficiency. It has taken out external liquidity, right? It has taken out the swing high. Then it came back down to fill the fair value gap. So what am I seeing there? I'm seeing shoulders, then I'm seeing sweeps. Inside that fair value gap, there is shoulder to the downside, upside down shoulder. No. You are showing me buy shoulder. I'm talking of sell shoulder.
Okay.
Exactly. Because price, remember, price goes to seek external liquidity. It has taken out the highs. Then it returns to the inefficiency. And what are we seeing as it has returned to the inefficiency? There's a shoulder between the 21st and 22nd with a long rejection wick. 21st and 22nd, upside down shoulder, upside down shoulder.
Jesus Christ. Right here.
Exactly. So there's a shoulder before that, there's another shoulder. Exactly. Shoulder, another shoulder. So what am I expecting now? If we have shoulder, then we have sweep. So what am I expecting after the sweep? I'm expecting price to break upward and tap into that twin tower resistance and that fair value gap. So 2190 levels, there's a twin tower resistance there. Exactly, 2184. Exactly. So there's liquidity there, and there's a fair value gap also. Right? So I'm expecting price to break above that 2184. To break above that 2184. Why? Look at liquidity all the way there. There's liquidity. So it has grabbed the liquidity on the downside, and it's looking like it wants to go and grab the liquidity on the upside. So there's a fair value gap all the way to 2210.
Right here.
Exactly. You can see the flip zone there. Exactly. So I'm expecting price to bounce up a bit into that level. Now, after that level, the trend is up, but gold is at an all-time high. It's in the level of price discovery. So when it gets to that level, if you have entered your buy, when it gets to that level, take profit and move your stop loss to break even. Because if price breaks above that level, it's going up. But if that level holds, that means price will have taken external liquidity on the 21st, come down and cleared and closed the inefficiency, the fair value gap, then gone back up to clear another inefficiency at the upside. And after clearing that inefficiency, what is it going for? It's going for opposite liquidity below 2150 levels. Does this make sense or it doesn't make sense? Abigail, you can draw the arrows. Let's see. You can draw the arrows. Let's see. So that's what I'm thinking. Of course, I'm using sentiment. Exactly. Price tapping into that level. When it taps into that level, if you're on a buy, take your profit, move your stop loss to break even if you want to let it run. Or it's going from fair value gap inefficiency to opposite liquidity or external liquidity, which is a swing low or a swing high. So once it clears that one, then we already know what to expect. It's going all the way down. Where will it likely terminate? Let's see our higher time frame or zoom out a bit. Exactly. See those lows at that base. Aha. Is this making sense or is it not making sense? Exactly. Fantastic. Because that will now have been a larger shoulder sweep, break to the downside. If you are confused or if you need help, say, please find me. If you understand what I'm saying, say, I understand. Making sense or not making sense? Abigail, am I getting it?
Yes, sir.
It's making sense, Abi. Demola, am I getting it? All right. So this is what I think will happen. This is what I think will happen. It will move up a bit, tap into that fair value gap, then break down. There's liquidity all the way. Look at all those. Exactly. They are all there. Triple bottom. And then fair value gap right at the downside. Okay. Now, of course, we have to use DXY and DXY and bonds and bullion. Are you asking if you are getting it? Of course, I will ask now. I don't understand. Am I the owner of the market? Is my surname Biden or Yellen? I will ask now. If you read this book by Ray Dalio, Principles, he's always talking about how that there must be collaboration between traders. You should get the book, Principles, Ray Dalio, anything you can see on Ray Dalio. You have to, because for every time you click sell, somebody is buying. For every time you click buy, somebody is selling. So you have to look at both scenarios and then choose the one that makes the most sense based on your confluence. Myself and Sir Mike had a long discussion over the weekend. Because if you are trading the box pattern, there is where the box pattern fails. Please help us with AUD and NZD. Are you already in the trade? If you are already in the trade, my brother, I cannot help you with anything because I don't really like trading financing currencies. Euro GBP, AUD, NZD, they are stabilizers. They are stabilizers. So instead of trading AUD, NZD, I'd rather trade AUD, USD or trade NZD, USD because they are stabilizing currencies. And one thing about stabilizing currencies, when they start stabilizing during accumulation, there is no trend on them. So let's see AUD, NZD. Once stabilizing currencies start, checking out NZD sentiment. To check out NZD sentiment is simple. Now, NZD is a risk currency pair. So if there is global risk on, NZD USD will follow the risk on. If there is global risk off, NZD USD will sell off. All right. So that's basically it. AUD NZD. Okay. The trend is up. We see a shoulder, but we've not seen a clear sweep. So if I want to trade it, okay, this 2 hour, let's see it on daily or 4 hour. Daily is not clear. There's nothing clear on daily. Let's see it on 4 hour. Okay, so 4 hour, there's a shoulder, there's a sweep. So it must break 1.08550. It must break 1.08550. It must break 1.08550. That's the only time when the shoulder will have been cleared. Exactly. That's the shoulder. So if it breaks that, then we have a box pattern. But there is a fair value gap. There's a fair value gap, and there is a twin tower support there. That's internal liquidity. Exactly. That's the twin tower support, and that's the fair value gap. It will act as some kind of resistance. So if it breaks through those levels, then we know where it's coming. See diagonal liquidity at 1.080 all the way down to that other block. To the other block that sponsored the move up. Exactly, 1.08, exactly there. That's another block there. So if it breaks that level and it breaks through that fair value gap and that twin tower, then it's coming to that place. However, let's zoom out because I saw a flip zone. A swing, zoom out. Exactly, see that place there, that high. Exactly. Those two highs formed 15th February or thereabout. That can become a flip zone now. The highs that are a left shoulder. Around 1.0800, 1.0800. Those double tops now, 1.0825. All the way up, exactly there. Zoom out a bit. You see that's a double, exactly. Let's see everything plus the last one and this one.
Okay.
Exactly ahead. Oh, exactly there. But let's see what's at the end. Move it. No, I'm saying let's see the thing we just analyzed, the last 3 days. Exactly. Fantastic. So, Abby, I want to see those double tops with this week's price action. Exactly, fantastic. That's it, fantastic. So do you see the double tops there? Exactly. So you mark that. Why? Because it's a flip zone. Support has become resistance. Sorry, resistance has become support. That's a flip zone. Exactly. So we mark that. We are expecting that place to hold. If that place gets taken out, so you can now zoom in now that I've gotten those places. Exactly. Okay, so now that we've gotten there, that's the shoulder. That's the fair value gap. So that place should hold. That place should hold. So if we have our shoulder and price breaks below, do our markup for us, please. Our arrow, where price could possibly go. If it breaks below, okay, exactly. So the first thing is that place should hold and price should move up. Why? It has gone to external liquidity. As it has gone into external liquidity, it has gone to a flip zone, it has gone to a twin tower support, and it has gone into a fair value gap. So it should tap into that place and go all the way up and keep trending up because the trend is up. If it can't do that, see our liquidity that it has formed. All that liquidity below that level, the diagonal liquidity, the impulse move exactly from that other block. So that's where it's going next. To grab that liquidity and tap into that other block. If it grabs that liquidity and taps into that other block, no, you can leave that one as a first scenario so that they will still have that. The guy that said I should analyze. I hope you are seeing it too. So the second one is it will continue lower and tap into that level. Exactly. And once it taps into that level, that place that was supposed to be a support that is broken will now turn to resistance. And then price will come all the way down. These are my scenarios. I hope this is helpful. All right, so that's basically it. I think I'll hand over to the guys on the floor. We've stayed quite a bit on today's, but as much as it's possible, AUD, NZD, Euro, GBP, they are financing currencies, they are stabilizers. Don't trade them, except you have a unique strategy. Don't look at them like normal currency pairs. They are not. They are stabilizing currencies. So once a stabilizing currency or a financing mechanism, these are currencies that are very correlated, that move the same way. So they are used to stabilize when those trends happen. Okay. So that's basically it for the guy that asked me on AUD USD. The other person that spoke about the conversation myself and Sir Mike talked about, we're just talking about strategies, how that there are reversal strategies and there are continuation strategies. Some strategies show you when the trend wants to reverse. Other strategies show you when the trend wants to continue. If you will notice, box strategy is what type of strategy? Or box pattern, shoulder pattern is what type of strategy? What type of strategy is it? Comment. I need to... The box strategy is a reversal, exactly. So when price is trending, the box strategy will be failing. So you now need to have another strategy for trend continuations and know them exactly. So we know the exact point where box strategy gets invalidated. The exact place where the box strategy gets invalidated. Because once it gets invalidated, what do you expect? You expect price to keep moving. For example, Abby, let's see from the 6th of March. There's a box strategy there, 6th of March. This same time frame, 6th of March. This exact same time frame, 6th of March. Do you see the shoulder after the 6th? There's a shoulder that was formed all the way up. When it broke out, that's a shoulder. Where is the sweep? That's the sweep after it to the upside. Right? Then what now happened? Price is supposed to come all the way down, tap into that level. So let's show the shoulder. Let's see the place where the shoulder failed. The high of that fair value gap. That's the fair value gap. We see the return where it broke structure to the downside. Oh, they are no more there. Okay, let me see if I can. Okay, you're back. All right. So, Abby, that's the shoulder. That's the sweep. That's the break of market structure to the downside, right? So, where was it supposed to hold and reverse and sell? Draw the line for us, the place where your reversal sell should have happened. Exactly, that fair value there, right? So what now happened is even lower, is at that twin tower support resistance, rather, the variation resistance. That pin bar, that sell pin bar, price should not be able to break above that because that's the shoulder, that's the sweep. The sell pin bar. Zoom in a bit because I'm answering this person's specific question. Exactly. Okay, so that's shoulder, that's fair value gap, that's break. It broke structure to the downside. So that place of 1.0740, 1.0740, 1.0740, 1.0740, 1.0740, all the way up 40, 0740, 0740, 40, 40. You're going up. You should go up. Or just draw a line at 1.0740. Draw a line at 1.0740. 1.0740. $1.0740. Okay, drag it down a bit. Drag it down a bit. Some more, some more, some more, some more. So stop. Okay, it's 25, 0725. or 26. Exactly. That's where the sell should have happened. So do you see the shoulder before it? Do you see the sweep? Do you see the return to the fair value gap? Then do you see the break of structure? So as price tapped into 1.0725, what should have happened? What should have happened at that level? It should have sold. But because the trend is an uptrend, that level that was supposed to be, that level that was supposed to fall now became where it held. Exactly. It formed another shoulder, opposite shoulder. So that now became the shoulder. You now see the sweep. So it now became a flip zone because you must know when your setup fails. And as it became the flip zone, what now happened? Boom! Price went to all the way to the upside. So I've just shown you how a shoulder pattern that is for reversal can become a trend continuation pattern. I don't know if this makes sense. But the thing is, you must know how to do your higher time frame analysis and your sentiment analysis so you don't get confused. All right? All right, let me hand over to the guys on the floor. Today's TDA has turned to training. All right, Abigail, thank you for your patience. God bless you. So look, you can look out for all these things. When a shoulder pattern fails, when a box strategy fails, and how you will know how it's going to reverse and instead of reversing it to turn to trend continuation. Thank you, Abby. Thank you for your patience. Have a safe trading day. King David, why are you laughing?
Thank you so much, sir, for your time. All this knowledge people are getting, you start paying for it.
They should just open an account with
all right, so thank you
FA.
to everybody who joined today's analysis. We are going to reconvene again at 3 p.m. We're going to reconvene again at 3 p.m. to do a recap of how this morning's analysis played out. I hope this was really helpful.
Sorry to
You're seeing the good work we're doing here. Endeavor to spread the word. With that being said, we're going to be having our box strategy class coming up next week. So you're going to want to join that. It's going to be on the next week, Thursday and Friday. The flyers will be up shortly, so you also share the flyer and make sure you join the class so you learn how all of this play out. We also have some of our courses like the ATM cash flow training, and we also have our FS bootcamp training. Now, the FS bootcamp training, which teaches you a bunch of strategies we all use individually to analyze the market, it comprises of those methods, like 3 curriculum in one course, which is still, if you ask me, and it goes for just 125,000 naira. If you would like to cop that, simply WhatsApp our number 081 60 99 50 30. For more details on that, the number will be dropped down in the chat box. If you also want to enroll for the ATM cash flow training, it's just 100,000 naira for the first 25 people. Then we have our sunshine scalping course as well, and our ATM plus training. All of these are definitely going to help you make a difference in how you trade the financial market. We also have our bots up for sale. So if you're somebody who barely has time to trade yourself or go through this analysis process, you will want to get one of our bots. Simply WhatsApp the number as earlier stated, and you have all the information needed on all of the services that we render as a firm. With that being said, have an amazing day, guys. Cheers. All right, so we have a TDA Plus group, right? Where we give you our entry, exit, and SL points, our SLs, our take profits, and our entry points on the different pairs we trade, everybody on the floor. And to be a part of that group, it is simple. Fund your account, send us proof. We're going to drop our IB link. I think it's already there. Endeavor to use our IB link to make sure that you're on our list. We add you up to our TDA Plus group, and you begin to see the way we trade, and you trade alongside the traders on the floor. You can also see in the chat box a message sent by our boss. Please open an account with Okta. The market color is free, but it is powered by Okta. If you're learning from this market color, you're trading another broker, you are wrong. You've heard it, you're wrong. So endeavor to open an account with Okta. If you have issues trying to navigate their website, simply use Opera Mini. and turn on your VPN. It's that simple. Just turn on your VPN, use Opera Mini, and you'll be able to access the site. How do I change my IB? Simply WhatsApp their customer service and tell them that you'd like to change your IB to the IB we're going to provide you, which has already been dropped. Just tell them you want to change to this IB, drop the IB there, and it will be done in less than 3 minutes. Their customer service is really quick. I have sent mails to them, but there has been no response. Are you sure you're sending it to the right mail? Please send a message to WhatsApp and I'll guide you through. All right, with that being said, have an amazing day, everybody. Don't forget to share the word, and don't forget to join our New York Market Color session. Cheers and God bless. Thank you for joining once more.